All right. Welcome in, everybody. Sorry we're a minute late. That was mostly my fault. We had some technical difficulties today, but what's new? Happy July. I know this is our first one of the year so far. Excuse me, not the year, of the month. We had 4th of July, so I hope everyone had a good 4th of July. And then last week we were actually in Las Vegas for an awesome show. It was called Freedom Fest. Bunch of new people that actually might be joining us tonight. So if this is your first time joining us on the AI Circle, we want to say welcome. I've already seen a handful of questions in the chat here. I'm just going to briefly go through the agenda and then we'll get back to the disclaimer. So we do have a few announcements, a couple things to go over. Also, as a reminder, if you are still getting the pop-up inside of your app asking you to upload a picture of your license, please do so. We had a bunch of people do it, but not everyone yet. So sorry to be the pest, but we do need that information. As always, we'll do the market update with Kelly. We actually got into a couple things I saw recently. So the AI has made a few trades. And as you've already seen in the chat, there are questions popping in. Feel free to enter those anytime, whether it's now or whenever they arise later down the road. But just as your final reminder, the Q&A is your gateway towards potentially being our winner tonight for the Amazon gift card giveaway. So with all of that being said, let's welcome in Mr. Kelly Korshak. Kelly, how you doing?
I'm doing well. Thank you. Hello, Lee. Hello, everyone out there. It was a long last week. Oh, my God. I think I'm going to freeze again.
Yeah, that's all right.
I'm just there. I am, but I don't want to have that look on my face as I'm frozen. This always seems to, I don't know if it's my camera or it's the definition or my internet, but I got to look a lot better than that.
Oh, we're back.
That's me changing the settings. So I might do that a couple of times if I catch myself with my mouth open, in some stupid way. So forgive me, anybody. I have the highest speed internet possible. I don't understand how that happens.
Must be overheating for you in Phoenix.
Yeah, and I thought Phoenix was hot until I went to Las Vegas.
Yeah,
so that was crazy. I definitely learned something. I think we're going to start off again like I always do. We'll go through the general markets, the indices. We'll take a look at the dollar, Bitcoin, energy sector, some of the smart folios, etc. I see some questions running in. So one of the things we should also note is last week we migrated almost every one of our customers, literally the lion's share of customers, from our clearing broker dealer from Velox, a company named Velox, over to another company out of Texas named Apex. Apex is a much better solution software-wise for us to work with our technology to get back and forth in data correctly and more accurate on a daily basis. Also, it's going to help us on our back end and servicing with people moving the money in and out, much better customer service we anticipate. And that's the main reason we've switched broker dealers is there was customer service, but even between our broker dealer and the clearing broker has been mildly, I'm going to say it's been difficult. And if I were to be more aggressive, I could say something else, which I will withhold from everybody on this call. But I'm not here to talk about that. I'm here to talk about the markets. But please bear with us through that migration and as we update our code. Right there in front of you, Lee, I see has anticipated me talking about the markets. And there is our disclaimer. We can have a moment of silence and read it. Or, Lee, you can go ahead and quickly read it.
I like your moment of silence, but I'll read it out just because. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip smart folios you select are suitable for your investment profile before trading in a live brokerage account.
Yeah.
Got it.
And there we all understand that makes our attorney happy. It makes the regulatory bodies happy, and even the self-regulatory bodies happy. We must say these prior to any kind of pontification for our AI circle. Again, this is news. We have to kind of point it that way. That's why I'm allowed to pontificate and make what I think are good ideas and present them. So, but more than that, it's basically to kind of go over the market so we can get a broad idea of what's going on. And the main thing, by the way, that I took away from Las Vegas last week, um, given the event we were at, was a huge distrust of government and its agencies. That was the prevailing theme at this particular conference. And the distrust comes from ultimately from deep state ideas, which again, I'm not here to talk about whether I believe in that or not, because that at the end of the day shouldn't affect our portfolios. But no matter what we say, those things do affect portfolios. And last week is an example. Take a look here at the Dow. Here's the Dow. Over just the last 4 days, we know what happened on Saturday, but even prior to that, Trump has gained the momentum, obviously, and the Republican Party has gained the momentum. And we have seen a corresponding appreciation of some of the more narrow indices like the Dow. But let's take a look at the Russell. Look at this. The Russell was, by the way, this is year to date. The Russell was flirting with going down on the year right here. And then over that same 5 period days, we have a huge rally. I mean, it looks certainly huge. Why is that happening? There's 2 reasons. One, it's the anticipation of a new administration that'll be kinder and less regulatory on a go-forward basis, which is generally good news for the stock market. The other thing that it is what makes the stock market really happy at the end of the day, and it's lower interest rates. And let's look at the 10-year note. And look, the 10-year note is advancing in prices. We're at actually our highs. It is begrudgingly going higher. Now, this isn't a huge move, folks. In other words, interest rates are sitting around 4.11 on the 10-year note. They've been as high as 4.8 down here. Remember the inverse relationship. As prices go up, yields go down. And so right now we're at the lowest yields we've seen in the 10-year note over the last 4 months. And that has really helped the stock market. However, if interest rates go down, that is not good for the NASDAQ. And look what happened to the NASDAQ. This is why we see a bifurcated market. Lower interest rates do not help the NASDAQ. Why? We can go into many reasons, given that most NASDAQ and these kind of companies, the main Magnificent Seven, which have led the rally completely, obviously they don't need cash. They don't borrow money. However, many other NASDAQ companies do. And lower rates you would think would help, but they don't. It actually works the opposite. That's why the Dow has gone up and the NASDAQ went down. So today we had huge moves down in the S&P and the NASDAQ, but we still see the Dow up, which is very unusual. But we've seen a lot of this action over the last 3-4 months. So this isn't unusual, but it is par for the course that we've been on. The VIX, of course, you would think that would go to an all-time low when you're moving at all-time highs, but it's actually starting to tick up. So there is an element of nervousness from, by the way, all-time lows, but there is still an element of nervousness in the markets. And that's how you see like this tiny increase in the VIX. I don't think there's anything to make of it yet. Probably should be sold, but I don't know. And so there's nothing really I can really add here for any kind of clarity. However, we should jump to Bitcoin in here, and we're going to look at that directly through a Bitcoin portfolio here. So we know we have this pretty good sell-off in Bitcoin just recently. Over the last like month and a half, we've been going down. It seems to be this is kind of the case for the summer. I really had a much higher anticipation for Bitcoin earlier in the year, that I think by summer we can be much higher. So far, it's just flagged out. It's in actually what they call, this is a long pennant, and it's not giving me any indication as to which direction it'll break out. Sure looked like it might have gone down, but it rallied back to its middle section of the pennant, which means, at least from Edwards and McGee, which is a classical technical analysis point of view, that means, again, we're nowhere. It is just as likely to go up as it is to go down at this point. My guess is probably a little marginally higher. Let's see what happens here. But this Bitcoin is starting to diverge a little bit from the stock market, because the stock markets were really kind of floundering, and Bitcoin came down with the rapid increase up in the Dow, and the change in interest rates to a little higher. Bitcoin seems to be able to like that, and it is moving back up. So we'll see what that has. The jury's out on where its price is. I'm still calling for higher prices by the end of the summer, above the old highs. We will see. The currency markets, I think it's also important to look at. So let's look at this. If I go look at the dollar index, it's this, don't make any moves of these up or downs. Notice it's inside these bands. They're just moving. This is the way you want to see global currencies move. They move inside of bands normally because there's exchange between goods and services between different countries, and it oscillates like this. This is a very normal oscillation in price for the US dollar over time, to be in these kind of what looks like a wide range, but it's actually kind of tight if I look at it historically. You only see these big moves when we're in something like this, but this is a normal kind of historical market. Why FX traders make so much money, because they just play within the boundaries. On the lower end of the boundaries, you're a buyer. Upper end of the boundaries, you're a seller. They do that up until it changes those boundaries, and that's the rub. The yen still deserves attention. The yen got a little bit stronger just recently, but that's because interest rates in our country now seem to, because of the Trump rally, maybe seem to go lower. And of course, if our rates go lower, less reason to move assets to US to capture the US interest rate, which is generally a little higher than everywhere else around the world. That gets us through this. We already looked at Bitcoin. Let's go back to the watch list. Let's take a look again to the energy sector. So the energy sector, as you know, everybody, I've been very steadworth believer in this, in the red oil product over the last year, 2 years. And I'm really sanguine about that because commodity prices, or commodities, things that represent commodities like oil companies, Halliburton, All Plains American, ExxonMobil, these kind of companies always pay dividends. And when you're not really certain about the political or economic environment, what you really want to do is go for something steady that pays good dividends. The oil sector has always been that, and it's been no exception. When we look at the oil market, and I'm going to now go to one of our main falls, which is here, is ExxonMobil. I think everybody could see right here. I'll make these things a little bigger. Hopefully you can see them better. You can see that this is ExxonMobil. We had a huge rally, of course, earlier in the year that brought Exxon to new highs around 122, 123. And we're basically there at 117. We did move down over the last number of months, but over the last month, we've been really on another rally. Why is that? Partially inflation fears, but kind of interesting that rates are coming down. Inflation actually ticked one tick higher, but oil prices are going up. Why? Summer. Generally, it's a driving season. So this is kind of a cyclical nature of commodities. So nothing new here. But if you're in the red oil portfolio, it is a good thing because this is a component, 25%. The other component is the index itself, which is really a mirror of ExxonMobil, but it contains all the other kind of oil-related companies and pays actually a little bit higher dividend inside of it. And if you look at it, it sure looks like ExxonMobil. I mean, I can almost barely tell the difference. Now let's look at our pipelines. I had a little marginal sell-off today in ET, but just after making a new high. Dividends are coming up in a month. When the dividends show up, they're paying about 31.7, 31.7 cents per quarter. A very high dividend. If we multiply that by 4, basically 32 cents, we're at $64.28 on a $16 stock. That's 7% area. Not bad to have 7% and the market going to new highs. And also considering the value of the pipelines, in other words, the infrastructure that they represent, I mean, is enormous. Good to know, good to have. So this is another 25% component along with All Plains American, which, by the way, made a new high today and then backed off slightly at the end of the day. These stocks, I still think I have much higher to go. So we like them, plus they pay the dividends. That's why the red oil has been one of our favorites. I kind of noticed that the cruise lines are at the top of their range, just for notice, everyone. I think that's interesting to keep that in the back of mind. There's Carnival, in here is Norwegian Cruise Lines. Again, they're kind of making a stab to the top of their lines. This is really a function of the economic appetite of discretionary spending in the U.S. economy, which remains very high because we all know Americans like to spend their money. We are a consuming nation, and a vacation is something we consume. Let's move on to some other, I think, interesting stocks to look at. AT&T, boring. That's what I think of. It's my phone service. I find it boring. However, it's also paying 6.7% on its dividend right now at this price. Maybe a little tiny less because we just got up to the all-time highest close it's had in, honestly, since looks like about, more than a year ago. So I expect AT&T to travel back up into the 30s, actually, at some point and pay us a dividend. I do think there's a stop coming up in the early 20s. However, the early 20s is still another $2 away. $2 from here is another 10% higher, which is a good number. Finally, before we get into some Q&A and some of the smart folios, I think it's better watching to see what happened to the Mag 7 today. Look, we all know the stock market and the Mag 7 is brought in, hauled up the entire market, literally, over the last 12 months. Last 12 months, especially from the last November, September, October rally of last year. It's all been Mag 7. They are literally dragging everything up. And today we had the first reasonable correction in Apple. It's also in Google. It's in Meta. They are starting a little bit of a breakdown, but that's because of the interest rate scenario. The Amazon, same kind of thing. Even it's Amazon Prime Day. We'll put a plug in for them. Microsoft, same thing. They're just retrenching. Netflix, and finally, our all-time favorite is NVIDIA. Did take a good clobber today, which is down 6.6%. I don't know if you're selling calls against your ownership. That's a great day. I do think this could be an interesting stock to own, but I'm not going to own it unless it's another $10 cheaper at minimum. I don't like it here. I want it to come back to where it's split. That's generally what will happen at some point. So again, the technologies got hammered today. One of the biggest moves down I've seen in a while. But again, given their gains, what does it really mean? Just what does that mean? Not much. So the portfolios that seem to be, and I'll finish here, and we can do some Q&A, Lee, because I'm running out of breath.
There's a lot to cover.
There's always a lot to cover. The markets are like the news. There's always something going on. And It's more boring than the news in some cases, and sometimes but it's just as important because our financial futures are, many of us, they're tied to the way this moves on a daily basis or especially over time. The weakest performer we've had is our S&P model, which has been out of the market for a very, very long time. And the reason it's been out of the market is, again, I think this has been a couple of questions we've had from many people, because the S&P, the spider itself, is a part of all of our portfolios. And it represents the most nimble way we are able to participate in the market moving up and down. So in our case, I think I've frozen again, so don't worry, I'll try to fix that.
Sorry to interrupt. Were you trying to show a graph of the SPY? On my end, it still shows NVIDIA.
Yep, I will move to that. I was just fixing my thing. So I want to kind of show someone something. This is not completely representative of what we have right now, but I'm going to show an idea of why the way we do it, we can be out of the market for a very long period of time, and at the same time, like 15 months, at the same time, still show you how that works over time. So I'm about to bring up a window that hopefully will give you a concept of that. And I'm going to move to here and show you something.
Oh,
all right, everyone. This
I think it just went away. Sorry. I saw it for a second and then it went away.
Let's do it again. Here, 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 share. How about now?
Yep. Now we're good. Go ahead.
All right. This, whenever you see the model flat like this, it means we're not in the market. Here, we're not in the market. This is just a recent template of something I'm working on, but kind of shows you what it is. And actually, we're not in the market. It shows us here in the market, but we were not. Back here, I want to kind of alert people to how long we could be out. This was the 2008 financial crisis back here. This period of time was from literally April. I remember this April, June of 2007. We were not in the market all the way back here. We were starting to move in and out. But right around here in the early 2008, we got out of the market. We didn't even try to get back into the market until, look at this, everybody, until 15 months later in June of 2009. The market, before it did, had gone up, believe it or not, it looks different now because of, relatively speaking, the market had rallied literally 25% before we got back into the market. And why? Because we had just come off of a very large downturn. You can see this happened again in 2022. We were also out of the market for almost the entire year, and finally did get back in the market. However, we have missed a good portion of the last year's rally. One of the things that can make people misunderstand the way we do things is to say, well, why are we not in the market? What is the AI doing that keeps us out? And let me talk to that a little bit, because this is really important. Machine learning is something that reads all kinds of information, data. And that data, it looks at against the price of a stock or the price of something we're trying to measure and anticipate and predict. Predict is the key word. We can predict the future price by looking at the data that's in front of us. Well, the easiest data is the data of price itself. So we can look at yesterday's price and all the prices before that. That's one thing to look at. There's variations of those price, like derivatives of price. We can look at that. We can also look at, in the case of a U.S. corporation or a company, we can look at their earnings. We could look at their cash flow. We can look at their balance sheet. We can look at their expense ratios of a company. There's all kinds of data we could look at. We do look at some of that. And also on a macro level, which is a broader economic level, we can look at interest rates, short-term interest rates, long-term interest rates. We could look at inflation data. Is inflation going up, like the CPI, PPI? Is it meeting core values? What is that data? Where do we get this data? We get that from the St. Louis Federal Reserve. It's called FRED. Other data that we get, this very fundamental. Remember, I am the one that chooses the data to look at. So it's not the machine learning is learning to say, let's look around the internet for the data. We're actually making it point at specific data that makes sense to be able to say that makes sense that this economic data should drive prices of stocks, specific stocks and broader stocks like indices. Some of the data we look at is, for example, our national debt. We look at credit card debt. We look at credit card expansion. I look at data like auto loans repo. These are kinds of data that kind of tell me where the American consumer is at, what his debt is, and by the way, how much money do they have? So we can look at that too. And that generally shows up in the form of something called M2. M2 is a broad money concept of saying, hey, that's how much money is in my cash account, that's in my retirement account, and it's also the amount of securities I might have. There's M1, M2, and M3. I like M2. I can tell you that the data there, if you just look at the raw data, is very, very bearish. We have extreme amount of credit card debt in this country. At some point, that'll have to be resolved. That's clearly going to affect especially bank stocks. But at some point, there's going to be huge write-offs against a lot of the profits that these banks have been making with this higher interest rate environment. These things, though, in their aggregate, are things that are negative signals to the spider model, which is the SPY. And that is one of the main reasons, at least I'm anticipating, as to why the spider market has been out, even though we've been under at least a 12% rally since we've been out. So we've missed out on that 12%. However, it's been my experience in the past, and as you can look at this in front of you, that generally we're in the market. But when these markets roll over, the concept is you can see, if you look closely at this graph, the black line representing the S&P and the green lines here representing the movement of the model, that sometimes the S&P is better than our model. So back in 2016, 17, when we kind of rolled this out, the S&P had been beating the model, at least on a pro forma basis, when we got in. I remember some of these little, this here was the Christmas Eve sell-off where the market came down. We were out of the market. We got back in the market near the lows of Christmas Eve in there, and we started to perform and go up with the market. And we've kind of been holding better than the market ever since. This is the COVID decline, where we were out of the market before we lost money in the COVID, but the market actually went down 30%. We ended up buying these lows. That's how we got to start to get above the market itself. We maxed out at the end of basically 2020, the 2021. This looks right around there. Yeah, the end of 2021, beginning of 2022. And then the market came down. As we all know, 22 was a bad year. We came down too, but then we flattened out. Market went down further. We bought. Right now, we've been under a massive move up, and we missed this. However, I can tell you, there will be a time when the market comes back down, and we will buy it, and you will see that over the long run, these models will generally outperform the S&P itself. And even if they don't, I can tell you, this is very important, but people don't look at as much, we will take a better trip in getting to our destination if we use the model to manage the S&P positions. Right now, it's keeping us in cash, and that's telling us that whatever we have left in our portfolio, that is what's in the market. And so currently, if we have 70% of our money invested in stocks and 30% in cash because it's in the S&P is out of the market, it means if there is a sell-off of any kind, we're only exposed, if it was a beta of 1, we're only exposed for 70% of it. But if market goes up, we're only going to capture 70% of it. So that being the case, this is how we manage risk over time. And this is why we want to use these strategies. We do not want to ride this market down 30% should that happen, or 20%. We do not want that. That is the real goal of this company. So the idea is, of course, to beat performance, but the more important idea is also is to manage our risk. And on that, I think we should go to Q&A because I blubbered as
Perfect.
well as I can for 25 minutes.
And as it's been on brand for tonight, you are frozen again.
I will unfreeze me. There I look all displaced. Okay.
I'll start from the top. I know I can probably answer almost all of these, but so I think it was Adrian was this person's name. I hope my response to you made sense. I responded in the chat. But if not, and if I know there are people on here for the first time, so we do have a mobile app. We also have a web-based version. They all pretty much show the same things, but some things are shown in different areas. Like this would be one example. On the desktop version on the right side, we're going to show you everything that you own. You can click into it further and see all the different positions, prices you bought it at, etc. Whereas on the app, you just have to scroll down to the bottom. So the performance and what you've owned or what you do own is actually under the performance tables. So I hope that answers that question. But if not, please let me know. This is two questions in, two questions in two different messages here. But Zung said, basically, is this the right time to enter the mags? I believe he's talking about the Magnificent Seven. I know there's an ETF that they created about the mags, but there's more into the question as well. And then he also talked about his 4QR portfolio, which I can comment on after you. So go ahead, Kelly.
Well, in terms of the Mag 7,
yeah.
Honestly, for me, I would be guessing every sell-off we've seen in stocks over the last year has been bought. It's been bought at first because of the anticipation of lower interest rates that really never came. And at this point, I feel that the market has rallied so much that when they finally do come, it'll be old news and be able to sell the fact. I mean, I could look, as you can see here, we're looking at the NVIDIA. This is a significant, I mean, this is at the lowest price it's been since the beginning of June, which doesn't seem like that long ago, but over the last 6 weeks, we're at the lowest price.
Kelly, do you remember where it split or when it split? I mean, it seems like
it's almost when it's right at 100. So it split right around that time, and then we moved higher. But when I look at the Mag 7 in its total, I just personally, I can't buy it here. Personally. However, these things are managed by a computer. And if you do buy it here, the computer can manage it. Yes, I don't like the price. Just like the S&P, he's like, wow, I'd like to buy it cheaper. Don't like the price. That doesn't mean you don't buy it. You just have to accept the volatility should you buy it of what could happen. So we have recently just had, if I just look through what happened, we are off generally, Google, we're off 192.19. We're getting close to about a 10%, about an 8% correction in the Mag 7. It's pretty hefty. But the Mag 7 is up in the 60, 70% area when you aggregate them as an index. So I wouldn't be shocked to see it go down quite a bit more before you would get long it. So if it was me, I'll just sum it up. I'd probably wait a week and see. Or here's the other strategy. If you got 1,000 to work with, and I know I'm just using a number, I would put half of it to work here and then put the other half to work if it makes a new high or if it goes down another 5-6%, something like that. That's how you scale in where you keep a comfort level on your purchase.
Perfect. And the end of his question was saying preferably as passive as possible. So we do have the big tech portfolio that has all of these in there. If you want to be as passive as possible, like Kelly said, you might still have to deal with the higher entry price than maybe
But
earlier on. Go ahead.
yeah, but it's passive is not what this is. When you're buying the Mag 7 or, for example, the 4QR, these are the biggest money hitters there is. So these are things that you got to expect 10%, 10, 12, 15% volatility because it's trying to make so much more. So if I'm in the 4QR, I'm in something like the Mag 7, I really want that to be more like a 10, 15%, 20% exposure of my portfolio. And you can balance that off with something um, a lot less volatile like red oil. So, in the ratios would be similar. So you could have, say, 10,000 in red oil and 10,000 in Mag 7, and they will, between them, offset each other. One will be more steady, and one will be like trying to bat cleanup and always hit home runs, which also means you strike out a lot.
Yep. Perfect. And just because he brought up the 4QR, I just, this could be totally unrelated, but I know Broadcom which is AVGO, they just did a 10-for-1 split like Nvidia did. I know even Yahoo Finance, like on their graphs, it's all messed up and it shows a 91% loss and all these things. So, Zung, there is a chance that, because I don't think 4QR is down. I could be totally off. I personally don't use it, but I would expect that it's not down 5%. So it could be affected by that. I could be totally misspeaking. So we'll have to check into that more, though.
Yeah, I would also check into that because I'm suspicious of that as well. I remember we migrated, so I do worry about that. Most of the stocks that we held early this year on the 4QR did well, and I know we rotated in at the end of June, early July, like we're supposed to. Out of those, I don't know where that is because that's like just 17 days old.
A couple weeks
So
in, yeah.
I'd have to update to see where that is. But generally, the market's been up over the last 17 days. It doesn't mean that those 10 stocks were up. I do know that I think Nvidia was one of them.
Yeah.
So my guess would be in early July, we're going to be down on the Nvidia product because I got Nvidia up on the screen. And if we got in around, where's that? Say the 2nd or 3rd of July, it's lower than that now. So, but I don't know where the other 9 stocks are. So that's one to look. I'll look at the 4QR myself. But keep in mind, 4QR is a very aggressive approach to the market. What we're doing is we're trying to follow directional beta every quarter. And directional beta means we're going to look at the 10 best stocks that had the lowest beta and highest return over the last quarter. That's what we're trying to buy. And the anticipation of it is that those are the stocks that would probably do well in the following quarter. And that's kind of the approach. Historically, it shows very deep, heavy returns. And so, but we don't know, again, future performance is not indicative to past performance. And, ultimately, personally, I like following. The reason I'm in this business, and we're in this business, is the idea is to follow concepts that make sense in investing your money. And if you follow a concept, at least it's organized, and it's not really based on if the market is doing well or not. It's based on a concept. And the concept is generally mathematical. And it's sort of like this. Here's my metaphor for what it's worth. You go to Las Vegas, you can go in there and play a few hands of blackjack, and you may not know anything, and you might walk away a winner. But for the professional that's going in there and he's counting the cards, he's trying to put the odds in his favor. And when he does that, that means he's trying to reduce the risk. He's trying to find the best way to navigate the market. And if I had to back anyone, I'm going to back the guy that's trying an approach, a concept, and he's trying to be orderly about it, rather than some lucky stiff who just getting a good draw on the cards on a given night, or a few rolls of the dice. Anybody can be a winner. Just like I know a lot of people that bought. I didn't know what I was doing 2 years ago when I bought 500 shares of Nvidia, and all of a sudden now they're sitting on 700 grand. So I'd rather be lucky than good. But if I had to choose between what one I'm more likely to be, I'm going to choose good.
Definitely. And you're very on brand. Yep. So for anyone, this is their first time joining, this is not normal, but that's all right. We roll with the punches. Kyle said, my funds have been stuck in pending for a week now. Send in a ticket, waiting for a response. Just at a high level, the process. So when you set up an account, not only is the ID verification, but also a potential bank link. All of that is kind of going simultaneously. If you put in a deposit, it has to wait for those two previous things to clear, I guess, and then the money will be released. So it looked like the bank was pending. I see that it should be approved. Not to air out all your laundry or anything, Kyle, but you should see that money here pretty soon. Quentin said hello. Mary is a first-time listener or watcher, depending on
Hi, Mary.
If she's watching on her phone, just listening or whatnot. But thank you for joining us, Mary. I got a couple responses to people in the chat. Paul said, longtime customer, love the product, but he's got an issue. What's going on with the app? Home screen totals and position details seem to not be working. Don't like flying blind. I don't blame you. I wouldn't want to either. The custom smartfolio, I do know that's, I thought that was resolved, but I could be wrong. I'll check on the custom smartfolio for you. And I guess I'll look into your account more. Mine seems to be just fine, but that doesn't mean that there's not an isolated issue or something like that on your account, Paul. So thank you for all the long-time support, and we'll get your stuff fixed as soon as possible.
Is that Paul Schneider?
Yeah.
Yeah, that one I saw on another account as well. Generally, that's because it's not showing the buying power properly, and that's because of a service that we have between the clearing broker-dealer and our broker-dealer. That is one of the main reasons we're moving to Apex. They have a much more stable interface for us to work with. We've seen this particular problem where if I add up my buying power in the account, the money invested, it should equal the number on the top left, which is the total value of the account. I can tell you this for sure. The total value of the account is always accurate. That's never the problem. So that number is the gospel kind of number, because we track that number every day from the clearing broker. We trust that. However, the buying power movements like dividends that came in or deposits that were made or withdrawals, sometimes that, I'm frozen again, sometimes that doesn't show up quick. And as a matter of fact, we have to run an exception report to be able to find it and then update them all to say, wait a minute, find why is that out of balance? And 9 times out of 10, it's always the same thing, and it's easy to fix. That will go away at Apex.
Perfect. Hey, Jim.
Hi, Jim. Tag.
He said you're looking sharp, Kelly. So probably especially so when you're frozen.
It's the shirt. By the way, the shirt's green. If it renders blue, it seems.
It does look like a blue-green, but we didn't come here to talk about fashion, I don't think. So I can't be in that conversation. Jim, I do owe you a call back. I'm sorry as well. That he said, why don't I see the number of shares in the smartfolio? So there's 2 ways to look at that. It could be related to what Kelly was just saying about Paul's account. But when you click on the arrow that's pointing to the right under Own Smartfolios, it will give you a position-by-position view. Additionally, if you're on the computer, if you click on the positions tab, you'll see a very in-depth look at everything that you own, what you bought it at, what the last price was, and all of that stuff. So I'll get you a call here pretty soon. And then if you have any other questions, I can answer those then. This one as well, you should see the orange dot. Man, we got a bunch coming in here. Scott, yes, I did. I believe now we're just talking about everyone's accounts tonight. This is hilarious. The account should be all good to go. I got word yesterday that it was all approved, and I think the deposit should be coming over shortly. That was something who's now I've gotten them all confused. It was someone else. I think it was Kyle, maybe, who's in the same situation, just waiting on all the verifications to be able to release the funds. Paul said showing all zero. Okay. Patrick seems to be buying power issue. Edit smart folios. This is actually a good one. Not that the others weren't. I didn't mean it that way, but my account numbers have changed. So any retirement account or personal, like individual brokerage account, over from last Friday over the weekend, we migrated all of those accounts that we did have updated driver's licenses for and could migrate over to Apex. So if you're used to the 1FP or the 2FP account number, now it's a bunch of letters and numbers, and there's not really a commonality. So you are correct. The account numbers did change, and that was just due to the migration. So yeah, if anyone else has other questions related to that, just let us know. And man, we are way over time today. So sorry, but a lot of good questions. Kelly, it's your time, I think, to pick a winner, and I will.
But there was no questions today on the system, so it's like I just don't see any question here that kind of resembled something about the
nothing that impressed you, and honestly, that is okay. What I will say, though, is our next AI Circle is going to be the very last day of the month on July 31st. Quote me on this. Anyone in the chat who's available next time who shows up, do me a favor and remind me, unless Kelly's going to pick someone here.
I'm going to pick
we can do John, 2 next time.
I'm going to pick Don. Man, I know I've met you.
Yeah.
And I'm going to pick him, the one with the 4QR.
All right, scratch everything
I just said. Let's get him that, because that's the closest thing we have today.
Perfect. Well, Zung, and I'm probably not saying your name right, and I apologize. I've also met you as well.
I'd say it's Jung, right? Jung. Yeah, Matt. I'm so sorry, man, if I'm butchering your name.
I'm sounding it out like the stupid American I am, so forgive me. But you are our winner tonight, so I already do know you have an account. Sorry, you still have to go through the same thing everyone else does. Just send us an email to mailbag@iflipinvest.com. Either give us your account number or send a screenshot. You've already kind of shown everyone what smart folios you're in, but that is the only proof that we need, and we will get you your Amazon gift card giveaway, or your Amazon gift card. So you can take advantage of, what do they call it? Prime Day? Is that what's ending today?
Yeah, go buy something on Prime. You'll get paid later, though. Probably. I think it ends today. Everybody, thank you so much.
Thank you, guys. Thanks for the patience with all the tech difficulties today. Like I said before, though, we will see you next time, 2 weeks from today on July 31st, normal time. In the meantime, have a great day. Enjoy all the heat that I've heard is all across the U.S. right now, and we'll talk to you guys.